Home prices continue to increase while the number of homes available for sale remains at record lows. This has presented today's buyers and sellers with so many challenges, and it's led to so many conversations around the housing market crash or the next bubble. So today I thought that I would shed some light on this topic and give you my 2 cents. Now, if you ask 3 different people their opinions on the market, chances are you're gonna get 3 different answers. I've had this conversation on repeat lately. So many of you are concerned that we're going to experience another housing bubble like the one in 2006, leading to the crash in 2008. So I thought it was worth breaking down some data, looking at the facts, and then making an educated decision. So let's start by looking at what happened back in 2006 at the beginning of the last housing crisis. Back then, nearly everyone could qualify for a loan. There was predatory lending, high-risk loans, and lenient underwriting. They were literally giving money to every Tom, Dick, and Harry that walked in and applied for a mortgage. If you look at the volume of mortgages that originated when a buyer had less than a 620 credit score in 2006, there was around $376 billion of mortgage loans. Compare that to 2020 and there is only 74 billion. That's a huge difference. Lenders were giving out mortgages that they ultimately knew borrowers really couldn't pay back. So this is what really caused the last market crash. Another fact to consider is during the last housing bubble, as home prices increased, people refinanced their homes and pulled out large sums of cash. They were cashing that equity in on their home like it was an ATM faster than you could say, "Don't you do it." Then when home prices began to fall, that caused them to spiral into a negative equity situation where their mortgage was higher than the value of their house. Today, homeowners are still refinancing. I mean, heck, I refinanced last year. But people are doing so to take advantage of great interest rates. And they're being smart. Instead of doing cash out refinances, now homeowners are letting their equity build. The percentage of cash out refinances where the homeowner takes out at least 5% more than their original mortgage amount is about half of what it was in 2006. In today's market, the home price increase is strictly driven by basic economics, supply and demand, right? In 2006, people had FOMO, fear of missing out, leading up to the housing bubble, and that drove up buyer demand. Back then, there was more than plenty of homes for sale to meet buyer demand. In 2006, there was over 7 months supply of existing housing inventory available. Today, that number is barely a 2-month supply. Now, I'm sure if you're keeping up with the market, you've heard people talking about the struggles of finding a home in today's market. This is why. Builders also overbuilt during that bubble, but then they pulled back significantly over the next decade. That pullback is the major factor in the lack of available inventory in today's market. There's simply not enough homes to keep up with the buyer demand. This market is really nothing like the run-up to 2006. But if I were a buyer right now, is it scary to jump into the market when prices are going like this? Of course it's scary. But guess what? Risk equals reward. Now, when I'm talking to my clients, I'm thinking long-term. Interest rates are so low right now that your monthly payment is going to be so low. So if you hold on to this property for 7-10 years, which is the average length that Americans keep a home before they sell it, then really you're in a safe zone because you can either sell that home down the road or you can keep it as a rental because your monthly payment is going to be so low. So in my humble opinion, I don't think we're in a bubble. I don't think we're going to experience a market crash. Now, I am definitely not a fortune teller, but what I can tell you is this. Over a long period of time, if you look at the housing prices, of course you're going to see values go up and down and up and down and up and down. But the overall trajectory of those values is a steady incline. So the question is, are you going to jump on the escalator now, or are you going to do it later when interest rates are going to be a little bit higher? It's really up to you. Every person has their own comfort level. So there's always those that like to play it safe, and then there's those who like taking a little bit of risk. Wherever you fall, there's no right or wrong answer. Now, I'm sure that you have an opinion about this. You know you have an opinion about this. So go ahead, interact with me, drop it in the comments, and don't forget to subscribe, and I'll see you next time.